Hey trading fam, ever looked at a chart and seen a tiny little candle with a long wick hanging there like it's just dangling off a cliff? That might just be the hanging man pattern, one of the more ominous signals in candlestick charting. Today I'm going to walk you through what it means, how to spot it, and most importantly, how to think about using it in your trading strategy. Friendly reminder, I'm here to share ideas and perspectives, not instructions. It's your call at the end of the day, so make it a good one. Let's get into it. Alright, so let's break it down. The hanging man is a bearish reversal candlestick pattern that shows up at the top of an uptrend. It looks like a tiny body sitting at the top with a long lower shadow, kind of like someone hanging by their feet. Yeah, dark image, I know, but it sticks. Why does this matter? Because it tells you the bulls pushed the price up, but the bears slammed it down during the session. And even though the price recovered a bit, that long wick is a warning. The sellers might be getting ready to take control. But here's the key. One candle does not a trend make. You need confirmation. What does that mean? Look for a red candle the next day that closes below the hanging man's close. That's your signal that sellers are stepping in for real. Without that, it could just be a fake out. Also, volume helps. If the hanging man forms on high volume, that's even more reason to pay attention. All right, let's zoom into this chart. You'll see the price starts with a double bottom W pattern, signaling a reversal and kicking off a solid bullish trend. The market climbs within an ascending channel, looking strong. But then, boom, right near the top, a series of hanging man candles starts to show up. You can spot them as small-bodied candles with long lower wicks. This is the market flashing warnings. Sellers are starting to fight back. Immediately after that, there's a gap down, a sharp sign that bullish momentum is cracking. And then comes the breakdown of the lower border of that ascending channel. That's confirmation. Price action completely shifts, flipping from bullish to bearish. If you were watching those hanging man candles and waiting for confirmation, this was your moment. The market then retests a previous support level and even drops below it later on. Classic example of how a hanging man pattern can be the first clue in a larger trend reversal. So how do people trade this? Some traders enter short on the confirmation candle with a stop loss just above the hanging man's high. Others wait for more patterns or indicators to align. Think RSI turning down, MACD crossover, or price rejecting key resistance. And remember, context is king. Don't just trade a hanging man in isolation. Use it with your broader analysis, support and resistance, trend lines, volume, you name it. Want more insights like this? Subscribe, like our video, and ring that notification bell so you never miss an update. Want even more? Download our app and join our WhatsApp and Telegram groups. Links are in the bio. See you next time.